Hello, everyone. Thank you for joining us today. My name is Chukwuma Nwanze. I am the CEO of Anchor. Welcome to our webinar on building a sustainable and profitable credit business in Nigeria. As many of you know, Nigeria faces a significant credit gap. EIFC estimates the number to be about $330 billion across Africa, and Nigeria in particular is responsible for a significant portion of that amount. Traditional banks tend to shy away from retail lending because they consider it to be too risky, and fintechs have tried to fill the gap, but one of the biggest issues they battle with is repayments, collections, and high non-performing loans. Recently, the CBN even had to revoke the license of one of the commercial banks, and part of the reason was as a result of their high, non-performing loans up to the tune of about 590 billion naira. Also, we've seen fintechs report very high losses. Recently, there was a fintech that disbursed over 1.2 billion naira to about 60,000 customers and wasn't able to collect, and because of that, they had to shut down. Now, despite all of these challenges, there's a company that stands out, and that company is Credit Direct Limited. They're a 17-year-old retail credit leader. Last year, they recorded a whopping 6.7 billion naira in profit, and they disbursed over 400 billion naira, while keeping their NPLs to as low as 6.7%. Today, we're lucky to have with us Chukwuma Nwanze, who is the CEO of Credit Direct. Chukwuma is a professional with over 20 years experience in the consumer finance space in Nigeria. He's the CEO and has helped Credit Direct strengthen its leadership position. He's been with them for over 10 years now, and today we're very excited to have him join us. So, Chooks, thank you so much for being with us today. And for us to get started, I think the good place would be to get a sense of your career trajectory. So tell us about the journey to becoming the CEO of Credit Direct Limited.
All right. Thanks a lot, Chego. And good afternoon, everyone who's on the call. It's a pleasure to be here. And thanks, Chego, for having me. It may interest a lot of people to know that I started my career in the civil service. I started in one of the MDAs under the Ministry of Transport, and I rose to level 12. That was in 2005 or so that I left. And then from the civil service, I joined the management consulting firm. So I had that stint in management consulting. I spent a couple of years there, and then I moved as CFO to an oil and gas downstream company. From the oil and gas downstream company, I had experience in a technology company, and I think some of the things I know around technology started off during my early days in a systems integration company. It was a leading indigenous systems integration company at the time. From there, I had spent some time building Nigeria's first ever mobile money product. But I think it was an idea that was ahead of its time, and then the regulatory environment wasn't right for it at the time. And in the last 12 years, I have spent my time in Credit Direct, joining as a manager 12 years ago. I became an executive director. I think now it's about 7 years ago. And now I'm running the day-to-day affairs as the managing director and CEO. So that's my story. I have a background in finance, but over the years, I've built up competencies in strategy. And so my go-to areas are typically finance, strategy, and maybe over the last couple of years, I've built out love for technology and how technology helps drive operational efficiency and ultimately profitability in businesses, and that's what I represent. Yeah.
Yeah, thanks a lot for that. I think the big elephant in the room, and I want us to jump straight into it, is how do you guys do it at Credit Direct? Last year, you reported very impressive numbers, over 6.7 billion in profit. where the NPLs were reasonable. How, how were you able to achieve that? And how have you guys been consistently thriving in a tough credit environment in Nigeria?
I think one of the things we believe very strongly at Credit Direct is that we define strategy as knowing what not to do. So we know what we not to do, and from there we know what to do. And when we know what to do, we are very intentional about execution, right? So the first thing for us is that we understood our strategy, and we're very intentional about executing that strategy to perfection. And so what you see today is that we formulated a strategy that will work, but we are more intentional about executing it. Some people say, "Oh, don't tell people your strategy," and I always say, "Well, it's enough for you to know my strategy. It's something else for you to be able to execute on my strategy the way I would," right? And so that's how we see it. The next thing, and these things aren't cliche for me, and I think of it as people. So strategy formulation and execution is one. That's one of the things we've done well. Next thing is the people. I think Red Direct easily has some of the brightest minds in credit in the country, and we are extremely intentional about getting the right kind of minds. I'm a strong firm believer that if you want to know the quality of an organization, is the aggregate brain power in the organization that separates it one from another. And I think Credit Direct is blessed with hundreds of very intelligent, hardworking, and execution-focused people. Still, other people is governance, right? I believe for any organization to stand the test of time, it needs to have a strong governance structure. And I will easily argue that I'm blessed with one of the best boards, right? Because the role of the board in ensuring an organization has staying power is very many at times overemphasized. So the aggregate experience and collective brain power of our board in setting the governance tone for us is also extremely helpful. Another thing is adaptation, being dynamic, because we are in a dynamic environment. So adaptation and resilience is another thing that we're very big on. I mean, if you think of it in the last 10 years, for example, we've passed through 2, 3 recessions. And you know what happens when there's a recession for a lender? You could get a significant battering, right? So we've been able to build up resilience. And so regardless of the headwinds, our model keeps us safe through and through. And I think it's fixing your eyes on the right things at the right time. It's very easy to get distracted when you're doing business. So if you think about the last 5, 10 years with the fintech revolution, absolutely everybody is throwing up buzzwords and doing cliche stuff and saying all kinds of nice things. And sometimes you may get distracted and want to, do what seems cool, right? And do what seems cool. Sorry. So I'm hopeful it's an error. Sorry, but I mean I think it will pass quickly. So instead of doing what seems cool to everyone, we basically just know what is right.
Is it not a fire drill?
Yes, I think it is. Just I
This
think
is
we
just
can.
a drill and not an actual fire alarm. Yeah, so we're just gonna give Chooks a few seconds to sort what the fire alarm issue. Hopefully, it's not a real alarm. Hello, Chooks. Can you hear me? Hello, Chooks. You're on mute. The conversation is still ongoing. Unfortunately, there's a fire alarm where Chooks is. So he's just trying to get that sorted and he's going to be with us in a few seconds. So thank you for staying and we're going to continue the conversation very soon. While we're waiting for Chooks, if you have any questions for him, please drop it in the comment section and we would go through and take some of the questions that we have time for. We're currently trying to get across to him and he's going to join back very soon. Thank you. Chooks is going to be joining us in a minute. He's going to be joining with his phone. Thankfully, he's fine, but there's actually a fire alarm, so he's just trying to reconnect. Thank you. Hello, Chooks. Are you? Can you hear me?
Yes, I can. Can you hear me?
Yes, yes, I can hear you as well. I hope you're okay.
Yes, I am. I mean, it's just a fire in the building where I was, but yes, I'm fine.
Okay, okay. Please, safety first, and thank you for
Just give
joining.
me 1 minute. Let me adjust my mic.
Okay, okay.
Okay, can you hear me clearly now?
It's better now. Yes, it's better now.
All right, great. Yeah.
Perfect.
Okay, good.
So are you able to continue now?
Yes, I am.
Okay, okay. Sorry about that. And
Mhm.
for the audience, thank you for staying with us. Chooks will not be able to put on his video, so you guys will have to bear with my fine face. And we're just
Mhm.
going to jump straight back into the conversation. So, Chooks,
Yeah.
Credit Direct is not a typical traditional bank, and it's also not your typical fintech or credit company from a fintech perspective. How best do you
Mhm.
describe your model, and what are some of the challenges that are unique to the kind of model that you run?
So in the real sense of it, yeah, I would say Credit Direct is it's a mature fintech. A lot of the time when people think about Credit Direct, it's or they just feel guys who have been in lending for 17 years can't be. I would argue that across the lending value chain, our deployment of technology across the entire value chain is maybe unrivaled today. From the digital channels to credit decisioning to the use of automation, both at the front end and the back end of our activities, we leverage technology. What we've been able to do over the years is to make the right calls, whether it's the choice of the market you want to play in, make the right calls, whether it's about the timing to grow or scale operations in certain things, and our approach to growth, right? We have a very iterative process when it comes to growing things. So we don't fail on a large scale. We have a very iterative process, and so we learn our lessons very quickly. What some guys may want to describe as fail forward, we learn very quickly, make adaptations, make changes, and then scale it when we've gotten to a very optimal place. I'll give an example. There's a business model we had tried a couple of years back. We didn't do great at it, right? We took the learnings from that model. It's currently growing at maybe two x what it's every year, and now we have NPLs in that particular segment that are sub 3%. 4 years ago, we started at it. 4 years later, we've done it for 2 years, and we have NPL sub 3%, and it's contributing significantly to the growth that we see. Again, that's leveraging technology end to end, right? So Credit Direct is a fintech, right? But it's a
Yeah.
mature fintech that has grown from, I mean, years before fintech became fintech, but
Became
we've taken the
because
lessons of,
yeah.
let me quickly say this, right? You see, for us, building a sustainable organization that leverages technology is the mindset we have. We're not
Hmm.
talking technology for the sake of talking technology, but we're
Okay.
building a sustainable organization. And within the structure of a solid structured organization, when you layer technology in and embed technology in everything that you do, then you make some success out of it. And that's the mantra for us at Credit. That's the philosophy we hold dearly to.
Yeah. Yeah, thanks a lot for that. Let's even drill down into some of the products you offer today. So I believe you offer things like nano loans, personal loans. You guys have buy now, pay later. Some, you offer to like the paramilitary space. Can you provide some insight into the areas where you've seen the most growth and the most demand?
To answer that question, Sergio, I think contextually, when you look at
Yeah.
the opportunity called Nigeria, right? So let's think of the 220 million. I mean, juries are there as to what our real number is. But I think the last time I checked, and I guess the numbers are updated, if we want to use guys who are somewhat financially literate, and we want to use the BVN as a surrogate for it, I think that number is not of 57 million, right? So in the
Okay.
context of it, it is a reasonably large market. 57 million is almost the population of the United Kingdom. Do you understand? So it's a huge market, right? So when we talk about what areas have we seen growth, we've seen growth across absolutely all our product lines. Last year, for example, we grew our portfolio by 99%. This
Wow.
year, we are already growing. If I'm to analyze our growth rates this year, it's about 145%. But you see, contextually, um, 57 million is a huge number, right? So when we look at all our verticals, we see growth opportunities there because there's a demand for it. The real question is, how do I attract the right kind of guys, as I grow, who have the capabilities to repay me as and when due? And that's one of the things we ordinarily will focus on.
Yeah, and that leads me to the question around how you guys approach first, how you choose niches. Like, how do you choose? Okay, this vertical, we're going to focus on it. What are the things that you look at? And upon actually going into those verticals, how do you guys think about eligibility and assessment? So, when you pick verticals, how do you decide on okay, these are the kind of people we would lend to? This is what make actually a good borrower in this vertical.
Okay, so I mean, some of the things we consider, I mean, first and foremost, I think in Nigeria, we are blessed with intrinsic demand. There is demand for credit because of the nature of the economy, right? And this isn't a current thing. It has been like this for decades, right?
Yeah.
So there's always that need to bridge the gap, leveraging credit. And if you think about it, right? If you look at it, there's a CBN statistic that desires credit to be at 40% in Nigeria amongst eligible people, but that
Yeah.
number is at 3% as at the last time I checked. So we are still a far cry from credit. You certainly won't define or describe Nigeria as a credit specific nation because a lot of the things are still cash based. If you check your
Yeah.
house, I'm sure maybe 98, 99% of the things that you have in your house were bought with cash. So we are certainly far from being a credit nation. And so therein lies the demand that we are still very credit virgin, for lack of a better word. But when I'm looking out for who a good borrower is, right? I mean, some of the things we ordinarily will look out for, we're looking at your credit history,
Okay.
right? And I think credit history is becoming, I think there's a lot more information and knowledge or education around having a good credit behavior or a good credit score these days is better than it was 5 years ago or 10 years ago because more people are now aware that you can um, more people are now aware that you people are looking at your credit score in making decisions on whether you get access to credit or not. Another thing you can look at is the Sorry, I've just been told that the fire situation has been curtailed, so I would be back up in a
Yeah,
matter of minutes. Another thing we can look at is,
that's good to
uh,
hear.
uh, yeah,
That's good to hear.
yeah, thank you. So another thing we'll look at is financial stability.
Okay.
You know, I mean, does this person have a verifiable source of income? Right. I mean, it's a reality that I find who a good borrower would be. You're looking at things around his debt to income ratio to check if this person is a credit binger. One of the things we've seen in recent years is that a lot of people, once they realize they have access to credit, they begin to credit binge, whether they need the credit or not. We see that kind of behavior. Again, you're looking at things like employment stability. So how long has this guy been employed? You know, how long has he held a job? Can you determine patterns of stable income? And you see, why some people say, "Oh, not everyone has a job." The
Yeah.
reality about lending is that you're borrowing against the expectation of a cash flow, meaning that this guy you're giving your money must have a regular cash flow pattern to um, meet his obligations to you as and when they fall due. You know, so that's something
Yeah.
else we look at. So we're also looking at your repayment history, right? Are you the kind of guy who meets his obligations as and when they fall due, or you're one of those guys that says, "Okay, I'll pay this month, and a couple of months later I'll default, tell them one story, and then
Yeah.
pay again on a later date." If you don't mind, Sheldon, just give me 1 minute. In a minute, I'll be set up. Yeah.
Okay. Okay. Sure. Sure. That's fine. We can continue in a minute. For the audience, please, if you have any questions, just drop them in the comments. Once Chooks is back and fully settled, we might be able to take one or two questions from the audience. So please keep your questions coming and just give us a minute for him to come back to the call. Thank you. Thank you for joining us. Yeah, I can see some questions already. Please keep the questions coming. Keep the questions coming. Yes, there's going to be a replay link. We are recording it, so we would share that.
I had to pretty much determine which was more important, my life or.
Oh, this webinar.
So
Please, oh, I beg. Safety first.
yeah. So I chose the best of both worlds, but thank God the scare is over. Yeah, I hope you
Yeah.
can hear me clearly.
Yes, we can hear you loud and clear. You know, I was so sure it was just a drill. So I was very
So
surprised to find out
incidentally, it
that
wasn't a drill. I thought it
it
was a
wasn't.
drill. It
Yeah,
wasn't a
it
drill.
wasn't a drill. Thank God you're fine and well.
Yes. Okay, yes. So
Perfect.
yes, thank you. So
All
yes,
right.
I'm talking about the payment history. I mean, how is this guy? Is it paying us and when due? And you know, for a lot of people, they feel it's okay to pay now and then, or let's start paying well when the guy feels that I'm a great guy, then I can start defaulting. And as lenders, we see that a lot. You
Yeah.
know, when people just show the first, maybe you have a 6 month loan, the guy is consistent in the first month, consistent in the second month, and then he starts telling you a funny story thereafter. And then again, you're looking at existing credit relationships. How this person behaved with other borrowings in the past? So he's taking a loan from somebody else. Did he have the diligence to repay us and when due and things like that? And then you're generally looking at the person's profile or behavior. You know, if you see a guy who's, for example, social media activity, suggests that, he has a different view, for lack of a better word, to life. You're using that data and determining whether this guy, and so there's a lot of things. Different lenders consider different variables in determining who is a great borrower or not. But those are just some of the things that we
Yeah.
we take into consideration.
Yeah, but some of the things you've described are actually, for lack of a better word, restrictive. If we are going to grow the pie, you said maybe the penetration right now is around 3% in Nigeria.
Mm-hmm.
So it's still very early days. So a lot of people would not be able to meet some of these criteria that
Mm-hmm.
you've mentioned. So my
Mm-hmm.
question is, over the last couple of years,
Mm-hmm.
how have you been able to still grow your loan book despite the seemingly stringent and detailed information that you guys consider during your assessment and eligibility, decisioning?
I don't really say to my guys that any non-bank lender, right, who has 2 million um, well-behaved customers is going to make a significant pile of money, right?
Mm,
Right? And that's because if you and the way it plays in our mind is just using these BVN guys as a surrogate, that somewhere in Nigeria there are 60 million-ish people who understand what it takes to have a bank statement and have a
mm,
BVN number. So it means they have a certain level of financial literacy, right? If I believe that even though we have, we are all different characters, we have different natures in Nigeria, I believe there's a world where you can get 1 million, 2 million guys who will get it right. Now, big question is, what do I need to do to identify those guys? And because it's so we've been able to do that because one of the things we've done is identify a customer set of people who will meet their obligations as and when they fall due. And we've designed or work with collection methods that allow us to do that. Now, once you find something that works, you then deepen penetration in that to grow market share. And that's the philosophy that we have at Credit Direct.
yeah. Okay. And what you've mentioned now, there's a couple of fintechs. You said Credit Direct is a mature fintech that have taken different approach to credit in Nigeria, and some of them, of course, have gotten their hands burnt. And you said you guys are the mature fintech. So, what are some of the approaches that you've seen or that you've tried, and you might have talked about on this a bit earlier, but I want you to go a bit deeper.
Mm-hmm.
Which model do you think is appropriate for the Nigerian market based on your own experience?
To be honest, right, there's no one size fits all.
Okay.
I think
Let's
the organization we all have different organizational philosophies. For example, when you think of the concept of subprime, that there are people who have a different risk taste bud, who want to certain categories of customers. So the appetite will differ from organization to organization. In this country today, there are people who take loans at 30% a month, right? In this
yeah.
country today, and there are lenders who are providing service to them, right? I would sit down and say to myself that, this interest rate may be a bit on the high side, and would this not put this guy under financial burden? Because at Credit Direct, we are responsible lenders, or we will take a responsible. So it really depends on the philosophy, and that's why I can't give a one size fits all. I would say every organization should posture what works for them, but in that worldview, there must be an intentionality to get it right, to execute right on it. And for me, that's really it. If I say, like I said, we define strategy as knowing what not to do. So when many people are saying a lot of things, and it's really nice many a times, and sometimes we kick ourselves and say, why aren't we thinking as fast as this guy? We go back to the reasoning that, let's do what we know how to do well, especially because there's a scale opportunity there. Let's keep on getting better at it and making sure we are keeping customers or giving the best customer service, right? Ensuring our customers have the best experience, and then winning new guys, evangelizing, for lack of a better word, bringing new guys to our fold. And that's really what we have done successfully over the last few years. So again, as much as I would like to say, this is what you should do, the reality is that the circumstances differ from one organization to another. I remember once we were talking to some international would-be partners, and in describing what they thought their risk appetite was, we walked out of the rooms, and they sounded very cool with it. They said, at 25% or 30% NPLs, if you do this kind of numbers, you should be fine. That's not. So right there and then we knew that these are not the kind of guys we want to to partner with, and then we move on. So again, it is knowing what not to do or knowing what you know and doing it well is how I think about it.
Yeah. So, I mean, I would imagine that most lenders typically will do their own assessments and also do their checks using their own approach. But despite that, one of the biggest issues today is a lot of people complain about non-performing loans. How do you guys approach collections? And how have you specifically been able to just, keep that number really low? And why is there a big issue for many lenders, high non-performing loans in Nigeria?
You see, okay, I'll say this. The issue of non-performing loans in Nigeria has different reasons. Nigeria economic factors is one primary one. Economic downturns. I've talked about maybe 2-3 inflations in the last decade, right? Inflation rate, I've stopped keeping tabs with it, is north of 33% now. Unemployment, right? And because of the economic environment, businesses go topsy-turvy, and it impacts individuals who work in those organizations every now and then. So it can lead to unemployment. So the economic factors are one thing that can impact that. Another thing is, like I said earlier on, there are financial elements to it. The pricing of these loans, right? What's that appropriate price? We typically talk about pricing in our risk, right? What's that appropriate price? That will be deemed to be the right thing, because it could be cool to the organization, but may have negative impact on the borrower. And then you look at the decisioning process. Now, every lender would say, "Oh, we have our decisioning, the variables we use in making our credit decisioning, on what we are comfortable with or what we're not comfortable with." But what is the real? How stress tested are those variables, right? Because for many times when I see extremely high NPLs don't happen overnight, right? They at least, as a minimum, for a layman's definition, will be 90 days past due. So were you waiting, and was it building? So it depends again on your loan monitoring and your decisioning variables. And there are also institutional factors. I mean, the central bank and regulators have done a great job in the last decade to do things around identity management. I mean, BVN is a great thing. NIN has helped a lot with identity. But you see, there are still areas around GSI, for example, that will make it, how much commitment is there to open banking? For example, are the regulatory frameworks solid enough? What about the legal frameworks? You'd argue with me that there are some clients, as well as developed economies, you give somebody money, you can't go and harass him, he'll cry mental health, and that's the end of the money, So are the legal and regulatory frameworks solid enough?
Yeah.
But in terms of the operations, loan monitoring is everything. And every lender will claim that, "Oh, we have a loan monitoring team." But is that loan monitoring team doing the job of a loan monitoring team? Do you have the right OKRs or KPIs to ensure that your money is not getting lost? Right? I mean, someone once argued that Nigerians are good people. It's just the economic situation that impacts their decisions around credit. It's not that they don't want to pay. It's a willing. It's not a character issue. It's not a willingness to pay issue. It's just the impact of the economy. You'll say now it's not joint, right? And you have to look out for those fine details in decisioning. But more importantly, who is monitoring to tell when that guy is going off the radar? Some of those things spoken about, organizations talk like they have it. I was reading recently of an organization that says that, literally all that was disbursed went bad.
Exactly. Yeah.
I mean, there's definitely a loan monitoring, or there's an identity issue there. There's a decisioning issue there, and there's a monitoring problem there. And those are some of the things we take very seriously.
Yeah. But at this specific, we try to make this conversation as practical as possible. I'm saying from a, technology perspective and from an operational perspective, are there some things that you do at Credit Direct from a collection side now to ensure that beyond monitoring, even after you've done the right assessment and eligibility checks, you ensure that you can automate, you can improve, you can make that process of collecting efficient? And even when things look like they might be going bad, are there things you do, either technology triggers or operational items that you actually do to ensure that you actually collect your, you get your repayments back?
At Credit Direct, the first thing we say is, and we say starting from the loan origination, look for the guy that will pay you back your money, right? So that customer's credit worthiness is the fail-safe proof or fail-safe way to ensure you get your money back, right? One of the things that I would say, and again, a lot of people ask me these questions, and it looks like, oh, you're just giving generic answers. But the truth is, this is not generic. Sometimes simplicity is really, really the input that is required for it.
Yeah, it's the insights.
It's when we say loan monitoring, monitor the loan. Because remember that I'm not here posturing like, oh, we don't have NPLs. Of course, we do have NPLs, right? I always argue that a 5% NPL, I always say to my guys, for example, I don't like using percentages to talk about lending, because 5% of a 100 million naira portfolio, right, is 5 million naira. And in many worlds, it may not be considered to be material. But 5% of a 100 billion naira portfolio is 5 billion naira.
Yeah.
At that point in time, 5% is no longer 5%.
Exactly. It's 5 billion naira.
So I simply say to my guys, let's talk about the money at risk, not percentage terms, because you can say to ourselves, for finance companies, for example, the regulatory threshold is 10%. And you can say, our own internal guidance is 5%. But when you contextualize it, for a 10 billion naira company, that can be a lot of money. And so we also use that granular philosophy in dealing with every loan. It is not that, oh, this vintage or this portfolio, is that this individual is owing us 40K. Is that granular mindset we use in approaching it. Because at the end of the day, what is the portfolio? It's an aggregate of outstanding balances, right? But if you can isolate the individual, first by getting the right guy who has the right approach to lending, right? And again, you're never going to have it all together. And that's why we also pricing the risk. That at the end of the day, we have sufficient liquidity to continue on lending, and then the business remains sustainable and profitable. Our customers get that financial help they need at that point in time, and it also now ultimately impacts the economy. That's how we look at it. So for those who think, oh, you're not saying to me this is the software, it's not, honestly speaking, right? We have moved from using Excel sheets to sophisticated technology, right? We've moved from buying solutions to building our own solutions. But the real part of the matter, right, is people doing what they need to do at the right time with the right approach to work. When people say, oh, what's this? One of the secrets to CDL success, I say it's the people. And again, it sounds very cliche, but it's not cliche. Credit Direct has the best people in lending, because every day I see people who come and give their hearts to work. The large majority of the people will do what they have to do with an excellent mindset and with the intentionality of getting it right at every point in time. That for me trumps technology, trumps algorithms, trumps how nice some of the things we like to say are, and for me, that's my response to that question.
Yeah, I think, no, you touched on very important things, and I think the people comment cuts across all businesses, but because of the bias of the kind of audience we expect, a lot of them are very technology heavy. Of course, we are at Anchor as well. We are a fintech company, so I want to believe that there's also a role for technology. And I know that you guys have done some significant investments into technology to optimize your operation. So yes, we understand that you have some of the best credit people. We have no doubt, but it would be good to also hear some of the roles that technology has actually played in enhancing your operations from from the beginning up until collection.
Let me quickly say this, that first and foremost, there is a proliferation of technology. The world is not devoid of solutions that can help businesses at every point in time. And this is what I say about the use of technology. Very many at times we get pulled away with the bandwagon effect, That technology, oh, they have this, they have that. And I always say that organizations should understand their stage in business. A startup lending entity that wants to go all technology heavy will spend all his money on technology and have nothing to do lending, right? So I believe in a phase that Credit Direct has moved from being the number one paper pusher, right? Carrying, in fact, there was a time we needed to rent a whole building to store files.
Wow.
Today, with Credit Direct, we do not have printers because we don't even print anything, right? I mean, I think there's one printer to print stuff if we need to send something to the regulators. But
Yeah.
so people say, oh, is it paper light or paperless? I say, except what we are giving the regulators, everything else is paperless. But like I said, we rented a 2-story building to just keep files in the past, right? We've moved from, buying all kinds of below par softwares to having a solid core banking today. But you see, it takes time. Now, from at that point where we were doing all paper and all our sales guys were jumping from pillar to post, we were profitable. And so my point is always that in the phase of growth of your business or whatever stage your business is, look for how you can be operationally efficient within the resources available to you. It's just like I say to guys who say, oh, to get this customer base, let's make all these investments in marketing. I know it's going to give top of mind awareness and things like that. Now, while that is true in itself, does the organization's current operations and cash flows, right, give you that leeway to make the investment? I say to my guys that when we run our race, we do competitive analysis, right? We check what's happening in the landscape. But if you've ever watched an Olympics 100 meters sprint final, right? You're never going to see, maybe except Usain Bolt, who was aware. Right? But you'll never see those guys running and
looking around.
they were focused on that.
Yeah.
And so at Credit Direct, what we say to ourselves is that, you see, in determining what is right, we will stress test it, we will prove it and prove it and prove it, passionately debate it. But when we've gotten to a conclusion where there is, because we trust from our board to our leadership team to everyone in the team, once we've gotten to that point where we believe this is the way we should go, it is laser focused, right? And at that point, so I always say to people, don't be so. If somebody else is doing technology for something, just run your risk. I was reading an article from someone I respect so much in the industry, and he was talking about a particular channel that they just went to do. Now they stopped it, right? And the question is asking himself many years later is, why did I even get into it in the first instance? Right?
Yeah, that's what you're referring to.
Yeah. For me, the point is, we run our race at Credit Direct, but we also have processes in place to make sure that whatever decision we are making will be the best for the organization at that point in time, with that conviction. And in many cases, and today for us, leveraging technology is part of that process. So from our credit decisioning that is automated to our loan origination process that is digital end to end, we have transitioned. And so my advice to smaller lenders is, you see, instead of burning all that capital on technology within your niche, you can find efficient ways, and this could include technology, but you will find the right kind of technology to achieve those objectives. Let's not be bothered looking at what everybody else is doing. I can tell you something for free. We have a whole function at Credit Direct that just looks at what's happening in the market. But there is a filtration process that when that feedback comes, we must again remember what our core is. Remember what our how we are heading. Pick what is relevant and execute on it. But we make sure that when we execute, we'll be excellent at it. And that's the mindset that we have.
Thanks for that.
So whether it's loan processing, for data analytics and credit decisioning, to our CRMs, whether it's things that help us with regulatory compliance and reporting, things to drive operational efficiency. Like I said, at our back end, we don't do paper. There is nothing that happens paper. We have technologies end to end that help us achieve our operational objectives. And it's the same things we bring to our customer-facing application. Do we have human beings doing all this? Absolutely, yes. Right. So while technology is a great to have, we must all bear in mind that there's still that percentage of your would-be customers that want human
Physical
interaction,
interactions.
right? So
Yeah.
while it's great to talk about apps and channels and all that, bear in mind that some people don't want apps, even if they can use apps, they just want to talk to someone. And so regardless of how a customer wants to be served, Credit
You're there.
Direct has a channel to
Yeah.
address them. And that's how we leverage technology. Again, lastly on that point, for me, if it is not improving customer experience, if it's not helping me become operationally more efficient, if it's not helping me scale and expand my market or deepen penetration in an existing market, then that technology is just again another waste of investment. And if people on this call who are learning are honest, if they should check their technology investment against the benefit realization I'm describing, then you will find out where it is not all about the niceties associated with
Yeah.
technology. But if it's not helping with operational efficiency, if it's not helping you scale in a profitable way, if it's not helping you improve customer experience, and if it's not helping you deepen penetration or solve a problem in an innovative way, then
Yeah.
your
So
money is not.
don't invest in technology for the sake of technology. It has to be solving specific problems or helping you achieve specific objectives.
You know, my chairman said something to me one time, and he talked about if we can't consider something a strategic, if we won't say it's a successful strategic objective if it does not solve a problem
Yeah.
or correct something in the organization or fix something that's a problem in the organization, if it does not help us scale or grow market share, or if it does not lead to innovation that will make us winners in the future. Right. And every time I reflect on that philosophy, it makes a lot of sense. And I can apply that same thinking to technology. Bear in mind, right? We have these things I'm saying did not happen because we are divinely intelligent. We've also made some of the mistakes in the past where we said, oh, let's make this investment in technology. And at some point we said, why have we spent this? Now I think a lot more people will be wiser. You know, then when the naira was still friendly.
Exactly. So people
Very
are
trade.
thinking about
I
this.
think people would think in a more objective way when making technology
Yeah.
decisions. Yeah.
Yeah. No, thanks a lot for that. And I would make a comment just before we leave this point that, you know, an argument someone can make is that they want to get to where CDL is in 2 years, not in 17 years.
Mm-hmm.
And they see technology as a possible enabler to get there much faster, while taking some of the other learnings in terms of the operational excellence, the processes, the people that they need to have. So I just wanted to chip that in. And I chip that in because one of the things I also want to say is that for us at Anchor, you know, we provide credit infrastructure. So for businesses who want to use technology, instead of you spending all your dollars that you're supposed to use to lend, to go and buy one foreign technology and start building a full team, you can work with us. You know, we are not, our own strength is the technology infrastructure, not the actual lending processes and all of that. So we can work with you to achieve that. So I just wanted to chip that in. And thanks a lot for that exhaustive answer. I think we quickly talk about a bit of regulation because our time is fast spent and I want us to actually keep this to 1 hour because I know you have other things to attend to. You know, we've seen, of course, different things, different activities in the fintech space around credit. So I think if you just very quickly take us through your thinking around how you see the regulatory space evolving within the credit space. So what changes can you anticipate? Is there anything you guys are doing to prepare or to adjust for that?
I think first and foremost we must say well done. So especially for us in the financial service space, to central bank, as we've seen over the years, a lot of the things they are doing is strengthening. I mean, today's fintech industry, without say a needs, for example, would be non-existent, and this is a fallout of regulatory improvements we've seen. I think there's a huge opportunity for GSI to improve collections. I know the operationalization of it is a bit difficult, but one of the things I'm certain about is that and I've seen this over time, we will definitely get it right, because credit is required for us to achieve whatever objectives for a solid economy the government is looking for. So at some point we'll get it right. Anytime I cast my mind to 12, 13 years ago when I was in mobile money, every time I see what's happening now, I just know that at some point the regulators will say, no, this way we've thought about it isn't optimal, and then you'll fix it. We'll see that. I think open banking is also a big opportunity. If you by chance happen to do stuff maybe in the United Kingdom, you would see that open banking just makes life consummately easy, right? And it leaves a lot of power to the consumer. And for credit to work, the consumer should be free to make decisions. Let the provider work on quality service delivery and a great user experience to win his customers at the end of the day. And I think, again, the open banking conversation has started, and I think it's going to. One that is really exciting me, right, is this new Credit Corporation of Nigeria.
Yeah, I was going to mention that.
Credit Corp is something that is exciting me. I've been opportunity to speak to the leadership at Credit Corp, and I'll tell you for certain, in terms of the need to provide credit infrastructure and lay the groundwork for credit to achieve its core objectives, I think the guys have it. They have a good view of what it is. Execution is a different thing, but they have a clear view of it. Now, I am very positive and I'm very hopeful that they'll get it right. Right. So I think those things are coming from government or from the regulatory environment. So there's really hope for credit in Nigeria. Now, what I always say to people is, there's such a thing as having a good idea, right, at the wrong time, or implementing a bad idea at the right time. Let's do all we can as guys in this space to remain afloat, so that when the environment is friendly, because it will be, if Nigeria makes progress, it will be. You will not have burnt yourself out of existence. You will not have damaged your reputation. So let us make optimal decisions now. You see this whole question about scale and getting there very quickly. Yes, it's for a reason that before you become an adult, you're a baby, you stutter and you walk. Everybody wants to build scale from birth to adulthood. It ultimately leads to structural deformities. And when we say, why a lot of businesses failing, it may not be far from that truth. Where babies certainly wanted to become adults, their bones aren't strong enough to carry them through what adults can do, and it ultimately leads to a collapse. So I'll say, let us pace ourselves. And there is a lot of growth within
this market.
Yes, you can pace yourself and still be growing very well. People think that you're saying you're doing 5x, 6x, 10x. You want to grow in a sustainable way. You want to grow in a way that, your people, for example, are not overburdened and are burning out, right? So again, that's what I'm asking. But I think there's a lot of hope in terms of what the regulators are doing, and hopefully in a couple of years we will see that change.
No, I'm glad to hear that you're very bullish, and it's very exciting and very comforting to hear as well. As we begin to round up, I'm just going to ask two last questions. The first one is, are there like specific parting insights that you can, very quickly just share with the audience around, just based on your experience in the credit space? At the end of the day, you said it yourself, we're still like about 3% penetration. Why is credit such a tough nut to crack? Why are we still where we are? What are the things that we need to start thinking about differently? What are some of the opportunities? What are the areas you feel like people are not paying attention to, that you can quickly just, in simple bullet points share?
Okay, bullet point one, I think, like I rightly pointed out, the demand for credit is there, and there's still a lot of credit business to do. Secondly, but we are far away from getting everything right. The second point is that customers, how do I say this? Customers place convenience, right, and speed above pricing. They place convenience and speed above pricing. I think it's somewhere to go. And as we all go on this journey, we must ensure, because those who are financially excluded are a lot more than those who are financially included. There's still a whole niche to find out for those who have the insights for it, but there's a huge opportunity for it. One may argue, how do you do that profitably? The answer is go and think about it. But it's something that we must all consider.
Actively think about.
lending is a risky business, and I'll be lying to you if I say, oh. And so when we see people who haven't been very successful at it, it's not because they didn't
do their own work, or they didn't try.
Do their own work, or they didn't try. The reality is that it's a risky business, and so because of the risk associated with it, we must do all we can to ensure we are giving credit-worthy people, and as a collective, let us not, in trying to outcompete one another, right, modify or foster bad behavior. Because you see, this thing about credit is good behavior or bad behavior. The more lenders encourage bad behavior in this space, ultimately it's going to come out and burn all of us. I think the regulatory environment is improving, and I think every time there's an opportunity for us to contribute towards the improvement of the regulatory frameworks that govern credit or finance in the country, we should all lend our voice. Let's not always sit back and think somebody else is going to do it, because ultimately, if everybody has that sit-don't-look approach, nobody's going to do it, and we'll be where we are. Technology is transforming and will keep transforming this space. Technology is transforming and will keep transforming this space. If you cast your minds back to where we were 5-10 years ago with technology, in fact, I have to say this story, right? We're in Ghana. I was in Ghana, I think 2 months ago, and we're talking to a technology company there. And when they were doing their demo to us, one of the phrases they kept on saying in that video was, we are technology. Or they'll say, this is digital. We are technology. And I was looking at my guys who went with me, and I'm like, this is where we were 12 years ago. But this was someone, and they are market leaders in their space. They are one of the most innovative players in that particular space, right? But in Nigeria, that was 12 years ago play, right? The same way we can take some of our technology solutions now to more developed clients, and they're like, dude, what are you guys exactly doing?
Yeah.
We will always keep moving at a faster pace. But let us look for those elements that can help us transform our business part time in an efficient and profitable way. So again, we should watch out for what technology, infrastructure, channels, and the rest will be. Lastly, competition is going to be when you look that feels more like collaboration, right? We cannot, in this space, they are going to be, for you to be successful, there'll be more collaboration than competition. Always bear in mind, competition is 3% and the target is 40%. There is a lot to achieve without cannibalizing or spoiling the market for itself. Lastly, we have to think of products in a creative way, right? It's not one size fits all, right? The more we can customize credit offerings to meet people at the point of their needs, the more practical it will become. And I know this because of some of the surveys that we've run with our customers at Credit Direct. The customers are the ones who need that product. Product guys, let the customers determine what the product should be.
Thank you for that.
That's how I want to respond to that question.
Yeah, and finally, as a parting word, you guys shocked the market when you released your numbers everywhere. I was telling you that in many WhatsApp channels that I was on, everybody was sharing it, and it was quite exciting. So there's pressure on you to do even more this year. So what can we expect from Credit Direct? Are you guys expanding into new products, new verticals? Are you going international? Are you going to 10x the number you did last year?
What I can say to that, I mean, we have quite a lot on our plate, and we are leaving nothing to chance. What I can only say is that if the market was excited about what we did last year, then it will be interesting to see how the market reacts to what's going to happen now and in the future. That's what I'll say to that. But there are a lot of stuff that we are cooking, and we are very positive that is going to help us achieve our financial inclusion objectives, help us achieve that proliferation of credit in this country, and we are going to be very profitable and sustainable whilst doing that.
Wow. That is all we have time for today. Thank you so much, Chukwuma, for this insightful session. I really enjoyed it. And thank you for taking the time, despite the fire scare. Thank you for staying calm and staying with us. And to everyone who has joined us today, I hope you gained 1 or 2 practical insights. And be on the lookout for our next webinar. It's going to be equally as exciting. Thank you, and enjoy the rest of your day.
Thank you, everyone. Have a brilliant weekend. Bye.
Cheers. Bye.